Hello, welcome back. Hope you had a good day in the stock market. June 29th. We're going to look at GME. We're going to talk about the banks. We're going to talk about overall market, S&P. We're going to look at options plays, how I'm set up, what I think GME is going to look like in the future, and a couple other plays that I'm in as far as options goes, as well as shares. Yeah, so sub up, like up, comment down. Happy money sticks around. And as always, let's look at the overall market a little bit. SPY, doing all-time highs again today. Yep, another day of all-time highs. We hit all-time highs yesterday, and that ended up being actually a green day. Today, it looks like it's going to be an all-time high with a red day. MACD is still bullish on it, and it's still above the 9 moving average, and it still looks bullish on a daily. However, when you start seeing these bigger dojis and just basically very small bodies, that's oftentimes a sign of a reversal. So I did say that back here, I did say it here, I've said it everywhere, and we haven't really had it yet. Back here when we were kind of mentioning it, yeah, this was a reversal. We had this big drop, but then Ken got kicked for different reasons and come up here, and then big drop, Ken got kicked for extending evictions. This one was for who knows what. Anyways, so yeah, markets, it's just frothy and teetering up there. Some COVID news coming out overseas in Europe and talking about, I don't know, basically more restrictions, wearing masks inside. It could be any sort of catalyst that sets the market off, or basically that they use to set the market off, and really there's typically an underlying issue that was a big problem, and they just use some news event and go with that, because otherwise everyone would know it was manipulated. And here we are in Bank of America, had this big dead cat bounce, then it crossed over the MACD, which is a short tail, and today it's selling off a little bit, not crazy. We're gonna talk about the banks a little bit and the failed delivers with GME. Talk about GME. I was kind of been saying it just looks like it's going to consolidate, maybe trade a little lower, and that's exactly what it did today. Not always right, but when I am, I definitely point it out. It's still bearish on the daily, so I was wanting this MACD to kind of settle down before we had a run. As hype as anybody that like, oh, it's going to break out, cup and handle is going. But with this chart, I mean, this MACD chart, how aggressive this is, and how, I don't know. It's I'm hoping it's not this way, but this was a failed deliver back here, just like we had here, and we had this after slowly melting down, consolidating for like a month, 2 months. Hopefully that's not the case, but I'm prepared if it is, and if it is, then it looks like we're going to slowly melt down. And just how this one, this kind of time, it kind of felt or found support on the previous resistance. This was like the first fail deliver, and then it kind of did that continuation stuff back there. So yeah, that one, the floor was, this resistance was this floor. So if that was the case this time, our floor will actually be this 180, which I've kind of talked about, where I kind of feel like we're going to come back down to. This is just technical analysis though. This doesn't incorporate anything else. So it could turn around, most likely. But yeah, on the daily, I mean, this MACD is quite bearish, and this is kind of just melting down, even though we have held this support so far, this 197, 198, for these 2 times it tested it. Our highs are getting lower, our lows aren't really getting higher, but that's just a descending type wedge, which isn't a big deal. What is good on this hourly though is this MACD on the hourly kind of diverging from the price action, so that's bullish, because the MACD is kind of coming up, this is coming down. So that looks good, and it could be breakout time. It really could. Just looking at the chart though, and just seeing where there's support, that's why it's hard for me to think that it's gonna break out without this MACD flattening out. It looked like back here, this was a very special case. So this is like the only reason why I could believe what or something different. I mean, it did kind of flatten out, but this day was a quick reversal. I mean, it basically went from that. Actually, even on that green day, look at that, it was still bearish on the MACD. So it could, we could have a huge day and it still be bearish. So that whole idea of the MACD flattening out first, I could be wrong on. Hopefully am, because we've got a lot of catalysts. I want to go over a couple different DDs that have been shared on Reddit. Try and shout these guys out. This is the first one. This is let's see, user Bosch 023. Basically all the news and different things that we're super hyped on, it hasn't been news yet. We haven't had any like real news. It's just been all speculation. Like, it's probably accurate, but it hasn't been official. And if it's not official, then most likely it's not going to get picked up by any kind of news media or mainstream or investors. I mean, they're not going to trade on hype. So this basically summarizes the different news, the actual news we're waiting for, that we're expecting and hoping for, and possibly why it's been pushed back. So Matt Furlong is the new CEO as of last Monday, I believe. And he's offered shares as his position, and his shares is an average price of the last 30 days, close price 30 days, June 21st. So it's $16.5 million worth. So if it's $200 a share price, that's 82,000 shares. If it's $1 million share price, it's not going to be that many shares. So the theory is to make sure he gets a lot of shares. They haven't announced any news to set off any crazy catalyst, because if they keep the share price low enough, he'll get enough shares and then they can set off the squeeze. I don't know if they really have that kind of, I don't know if that's a plan or not. But that being said, these different news catalysts that we actually haven't even had yet, it's just been speculation catalysts at this point. Market just closed. Wow, very flat trading day for GME. We dropped down and we just consolidate around VWAP all day, which is really good to kill premium. But yeah, so the NFT launch, they have that date on the code or whatever for July 14th. Update on plans for proceeds from the recent, the 5 million stock sale. What they haven't announced what they're gonna do with that. Typically companies will say we're gonna do this, and maybe it was RC buying it. That's a huge catalyst. 19% is his maximum possible that you can buy. I think he has 13 or something percent now. Potential dividend payment in depository stock award. So this would basically be a squeeze catalyst if this worked out with the crypto dividend. Proxy voting investigation outcome and next steps. That's true. We didn't really hear anything about the voting other than it's a majority. Possible merger, acquisition. That's just all over the place. No idea about that one. Could be anything. Q2 unaudited sales progress indications. Previously announced 9 weeks data. I don't know about that one as much, but basically a lot of these different things that we've been expecting or have been news maybe to those that are looking at it with a magnifying glass really haven't even been news yet. It's just been hype and speculation. So with that, Matt Furlong gets his shares tomorrow, the 30th, the last day of June, on Wednesday. So potentially they will start announcing, Matt Furlong will start announcing different things. And they have, if any of those newscasts comes out, those are huge. If all of them are real and they come out, that could be something. 005, I didn't remember this. 005 is also implemented tomorrow, I believe. 005 is basically marking shares that are sold short so that they can't be rehypothecated. So sold short again. So you can't just keep multiplying shares pretty much to sell short. So I don't know quite how it's executed, if all the shares that are sold short are immediately marked this way, or if it's when new shares are sold short that then they're marked. At any rate, it's going to wind down all of these rehypothecated shares that are basically fake and causing this to drag on. So that could be huge. That could also be part of the reason the last failed deliver didn't really deliver. Some people are saying it's still going to happen. Let me see. Actually, this one of the things I had was for that. I'm not going to read this whole thing. This is from Psyching Invest. Piling up. This was basically, let's see. Okay, yeah, so with all these new regulations, they're going to play the game differently because the rules are changing. Literally, the rules are changing for them because SEC, DTCC, NSCC, they're all making new rules. And so they're changing different ways that they have to basically work the system. This is basically showing how the failed delivers, it didn't work, and then maybe they're pushing it to a couple days further because of just the way the new rules, how they how they work. I can't remember exactly, but it's it basically just hypes you up for it's still going on, and the fact that they didn't cover on this last fail to deliver is just doesn't seem like it. They're basically digging the hole deeper, and it's possible that they were able to do that because of these new rules. But now they're just basically giving up on that front, and either there's two theories: either they're just going to take the hit and the fine or the problem, or these new rules are allowing them to do it, but when they actually do cover, it's going to be much, much worse. Something along those lines, guys. I can't remember all the details, but I think the big stuff is the Matt furlong. That's what I'm stoked about to see if they do start coming out with news, and then what happens after that. The rest of the market, talking about banks crashing, Bank of America's closing, market crashing, all this, and this was kind of interesting. So a lot of the banks are increasing their dividends. Just announced that today or yesterday. Some of them by up to like 50%, I think, which is kind of insane if you think about how high the reverse repo is and how banks haven't really been getting paid because everyone's been on forbearance. All this extra money though that they have, that there's no good collateral to invest it with. There's nowhere to put it that's safe. That's where the reverse repo comes in, from my understanding. Anyway, it's just and then all Fannie Mae dumping. So I don't know if this is true, but I don't know if this is the reason, but in 2008, I guess they all upped their dividend a bunch, and this is by The Future is Ugly. There's a few people that were posting about this because they all like simultaneously upped their dividend just recently. Just so what the theory is that gives a lot of investor sentiment, and people are stoked and people want to buy it, and then they basically dump it on. It's just basically a pump and dump, because if there's new dividends, higher dividends, people are going to start investing in it, and that's what they did in 2008, just before they dump it. So you can read about that. So those are kind of the different things I was looking at today, as well as just this nice sideways price action. I'll show you guys the options we did. Of course, the calls we have for this week are getting burned. Like I said, premium's getting killed, which is fine. These are 410 calls, so if something does happen before then, we've got some of these at a high average cost. No big deal. I did sell let's see. So I sold 2 more puts today at 207.50 for this Friday. I sold my 500 Express shares. Wasn't working out like I'd hoped. I took a loss on it. Best trader's the best loser, so I like to be a good loser. I also, what did I do? I legged into my Viacom calls. So I'll show you. The puts I sold at 207.5, they're up 10%. I kind of sold them. You want to sell when it's exciting and buy when it's boring. So I thought we were kind of going to drop down more today, so I didn't sell any more. But yeah, I sold them somewhere around here. And then just on this daily chart, I just feel like it's going to come down and find support for some reason at 180. And it might not. We might stay here. And if tomorrow it's like we're going to stay up there even longer, I'll sell more puts on it. Probably closer to the money also. So I was hoping we'd come down to this 198, 199 range, test it, and as we start to bounce, I'll sell a put for, that 200, 205 or something. But hasn't happened yet. We'll see what tomorrow brings. The premium on those isn't great because there hasn't been a whole lot of velocity to the downside, and these are out of the money. Ones I sold last week were like in the money and it was dropping heavy, so I was getting like $1,200-$1,300 a contract. These are like 600, I think. Yeah, 655. So that's fine. Little wins. CarMax is still up, so I legged into this one. Let's see, maybe I did that yesterday. Yeah, I legged in that one yesterday. So now that one's a debit spread. I've only got 3 days left on it, but they're both in the money because it's over my higher strike that I sold. So I just put on a good till canceled order to close it at max gain of 200. So that's the plan with the debit spread. Hopefully it stays up, otherwise I'll close it out for a little less. Hayward call looks like it's up today. That's pretty good. That covers earnings. It's got a lot of time. What else was it? Oh, we legged into KBH. Oh, what was it? Oh, Viacom. Yes, CBS kind of looks like it's, I don't know. I've got a good amount of time on this one, but it's been so volatile since I had that huge sell-off that I wanted to kind of make it a little safer. It's a small play, but yeah, looks like it's kind of consolidating on the daily. It's got so much upside potential, so it looks fine. I mean, the hourly it's bearish, but could come down to this 43 or so range and bounce, and then keep going on that bullish run because it's already broken through these resistances. There's some resistance right where it's at right now. But yeah, it's looking good on the daily. MACD is good, RSI is good. So what I did on it was I had calls. I had two, let's see. What is this? Okay, yeah, I had three. What? Yeah, I had three calls. Three naked calls. They were all up 100 and something percent. They came down a little bit today to 101%. And then I sold two calls at a higher strike, 52.5, for a total of $270 in premium. So my initial cost getting into the play to get three naked calls was $240, I think. And then today I just sold two calls further out of the money for $270. So I'm already up maybe $50 on the play. And I've got one naked call left and then two debit spreads. So basically these will get max gain if it closes above these on that date. And then this one has unlimited upside potential, that naked one. So that's what I did with that. Long term, looking good. Let me see here. Long term's looking good. I sold some covered calls.